Hello, everyone. It was another positive session for the overall stock market with the Nasdaq up 0.35%. The Russell 2000 was up 0.46%, and of course, that's the best thing to see because, as you can see, the SP 500 was up 0.27%, which means that the Russell 2000 led the way higher. Small caps continue to lead on the most short term ever since the Wednesday powerful session where the Russell 2000 was up almost 3%. And as long as we continue to see that, everything's good. The only problem is that even though we did have a couple of pullback sessions, since we really haven't pulled back for an extended period of time in a nice slow fashion, we didn't have a lot of nice quality patterns set up, and with the kind of move being another V-shaped move off the low still overall since October, there weren't a lot of great patterns that formed, a lot of high quality patterns where I could just bang my fist on the table and be like, oh yeah, absolutely got to go long. And that continues to remain the case. There are some higher quality patterns, but not everything is working, and that's because it's not like these viable gap ups of earnings are happening with the 50 and 200-day moving average converged on top of each other. There's still a bit of a gap between current price and the 200-day moving average. For instance, in our recent earnings winner INPV, FSLR is working short term, but as you can see, you can expect it to back and fill to get those 50 and 200-day moving averages to move up. So it'd be nice to see the market try to consolidate the gains here on the most shortest terms. Oscillators are still overbought, but are nowhere near extreme overbought condition. And once again, on the weekly, we've still got some very good looking momentum since we're rallying off short-term oversold, or since we're rallying off oversold conditions. So, there's still a possibility we just continue to V-shape higher, and which means we're gonna have to chase more riskier patterns. And on that note, we have a couple of long positions tonight that are higher quality. LOCK is a recent earnings winner. It's also a CanSim quality long position. A stronger close today on above average volume. BOP is still max green. It finally closed above the short-term resistance levels above it didn't close above it, but it on a closing basis, it closed close enough to me. I count it with the overall close above 1394, 1425. It appears that the uptrend definitely wants to start without a pullback, so I'd rather get involved with it now, have it pull back a little bit, use this low a day, 1281 as my final cut loss if it doesn't move higher immediately. But overall, LOCK looks very powerful short term, won't even pull back intraday, can't even stay near its lows, and it continues just to have a very powerful look to it. So once again, though, kind of risky because of where it's up. 2% for it being CanSim quality, 1% for it being an earnings winner for a total 3% position. Can't go any bigger. Chart's just not good enough. And VA is another new long position. It's having another pocket pivot point signal. It has had 3 pocket pivot point signals in 4 sessions. It's been up quite a few days in a row, though. 1, 2, 3, 4, 5 days in a row for a total of a 7% up move. But that being said, overall, even as you can see on the weekly, it's a nice clean breakout of a basically long-term cup pattern. So it's a nice breakout with the pocket pivot point signals and a well above average volume. I expect some pullback, so the first cut loss is a move below 35.77. It really shouldn't go below that, but I'm willing to give it all the way to 33.47 before I lose all of it. But because, once again, it's not like it's the cleanest pattern. You don't see the 50 and 200-day moving average coiled right at price. Once again, 2% for CanSlim, 1% for it being confirmed in my price volume BOP scan. So those are the two high quality ones, LOCK and VA at 3%. And then the higher, larger percent of my account capital, so I can try to get fully invested. And plus, I need to invest a larger size in this one to get the bang for the buck, and just hopefully we don't see what we see back here in August with it. I don't need to scroll all the way back there, but EPHE is producing another pocket pivot point signal following those August lows. As you can see, it's had quite a few. Volume was well above average, and BOP surged from an already high green level the day before. And you'll notice that on the up days, volume has well above average tendencies, and on the down sessions, volume is very below average. When it was heavier here, it basically traded nowhere, finding tight support before rallying again off the 50-day moving average. So this is going to be 5% of my account capital is going to be put into this because, once again, we don't risk much to know that we're wrong. 35.78 is the first sell stop, and 35.07 is the final sell stop. Don't want to pay more than 36.37. If it's gapping up in the morning, sure, 2.5% market order, 2.5% limit order on this one. But for the other stocks, because of the risk involved, VA, if it gaps above 37.95, I'm not chasing it. And same with Lock. If Lock gaps up above, I'd say 14.43, I won't chase it. Don't want to really pay more than 14.29, 14.30 for it. But you know what? If I see it gapping up above 14.43, I'll go ahead and put my limit order at 14.44. But for right now, my limit order is going to be at 14.29. But if it's gapping above 14.43, 14.44 will become the new limit order. There's also two speculative long positions, and they actually have better technical patterns overall. EL and K. EL and K is bouncing right off the 50-day moving average. Another pocket pivot point signal following one earlier in October. Big surge in volume and a nice strong surge in BOP. Extremely low risk position. We know we're wrong with a move and close below 827. Actually, a move below 827 and I will be out. A close below 827 and it's a sell on an end of day basis. Speculative, and I'm running out of cash, so it's only going to be 1%. And then also Flex. This is a former CanSlim quality stock 2 quarters ago. Hasn't been a CanSlim quality the past 2 quarters, but it's bouncing right off the 200-day moving average after retaking it the day before, so it's really just confirming a breakout above it on a very strong surge in volume and a very strong surge in green BOP from already green BOP level. Like the pattern overall, very low risk. First sell stop can be below 1143 or 1133. I'm going to use 1133. And then final sell stop below 1109. But once again, strong patterns. But once again, is Flex perfect? No. Is ELNK perfect? No. VA perfect? No. EPHE, I would, if I can get a stock that looks like this, I'd much rather put 5% in any name that builds this pattern than any of the other previous stock patterns that I just shown. And Lock definitely not, but it's an earnings winner, so it should run. But EPHE is kind of what I'm trying to look for. See how it's kind of symmetrical off its lows here, this August-October move, and see how this handle is symmetrical to that cut pattern with a pocket pivot point signal right off support with a surge in BOP. The only thing that make this better, max green BOP the whole way and no red bars above the yellow line here, and then it'd be more perfect. Also less of a V move and more of a round move, but you know, whatever. This market isn't very, you know, kind, so we have to deal with what we have to have. So those are all the new long positions. So 5% EPHE, 3 in VA and Lock, 1 in ELNK and Flex, which will leave me nearly fully invested. And HBP is an add signal, pocket pivot point signal, earnings, previous earnings winner, surge in green BOP again, surge in volume, appears to be under very heavy accumulation. I have my Market Smith close already, I do believe. No, I don't. So let's just go see HBP really quick. Just show you how strong the numbers are, which we've already done once before, but might as well do it again. Weekly, you can see here, big sales growth, huge earnings growth, and the estimates are huge, and earnings are out of the way. More recent insider buying. So, you know, HBP, this is an excellent stock to add to, but it's very thin, so don't want to pay more than 356. Limit orders only. No way in hell can you do a market order. Final sell stop is a move below these lows right here. And then also some house cleaning to do. USCR closing below the 20-day moving average on above average volume. My final sell stop was back down here at 50.61. It is now Tuesday's low day, 51.40. And then also meat. I was thinking about selling 25% as a market order this morning. Instead, I moved half of my sell stop to below 258. Quickly in the morning, it moved below 258 to hit 50% of my sell stops. My final sell stop was at 219, so 218 if it would have hit, would have triggered my final sell stop. That now gets moved up to 222, so if it hits 221, I'll be knocked out of meat. Do I regret not selling 25% of it in the morning on a potential parabolic climax move? Nah, I could have gone much higher, but I knew chances are if it reversed intraday that day with earnings coming up, it was going to go below the lows, and I took that risk. At the same time, this thing could have exploded to 350, so I don't regret my play at all. But already out of 50%, but the final sell stops with the move below 222. And I believe that is it. I don't see any buy stops on here. Oh yeah, by the way, CLLS. Damn. 2 days, 40% gain. Swing and miss.